Aloha and welcome to Java. Thank you kindly for joining me. It's August 30th, 2024. Happy Friday. And more than just being Friday, it's also a holiday weekend in the United States. It's Labor Day, so the markets will be closed on Monday. So if you are trading, you get an extra long weekend to think about your trades. Set yourself up for the weekend, if you will, coming up. So with this, a lot to go over. So let's get started with our risk indicators to start with. Okay, our favorite one, the MMRI, rising in risk slightly to 42.8. We watched some movement going on in the 10-year yield, as well as the relative strength of the dollar gaining. Now, this is making some of the other currencies weaker, and we'll talk about this in a bit. We've got the fear greed meter solidly in greed right now, going green. Everyone's jumping into the market on the premise that rate cuts are coming in September. Now, I think the market personally has overpriced this in, and we've got some other rocky waters ahead, so to speak. But I wanted to speak about Treasury notes at the moment. Treasury yields rising after the latest batch of United States economic data. Well, they're rising because demand, basically, they are selling off. So we had a bit of sell off happening with some of this going on, flowing money into the stock market. Now we've got a suggestion coming in here from JP Morgan. They're calling it the T-bill and chill trade, that it's about to end for investors. And the reason is the rates right now are high, so you can get a better return, supposedly, than inflation off of these. However, real rate of inflation, I think you're still losing. But the idea behind it is you put your money into these higher returns for the yields, and then you're making money off of it sitting there. Talking about the high yield on short-term government debt, and that it's going to come down when the Fed cuts rates. So when they cut rates, once those rates come down, you can't beat inflation anymore. So that's the premise to it. However, we've got stocks, all of the money flowing into stocks as they feed these. However, the stock market basically hit all-time highs, and it's hitting a bit of resistance at the moment. So for today, we've got a bit of a sell-off, a lot of profit taking. We've got stocks right now in the red. Futures saying that it's still green, in a bit of a disagreement. So we've got a mix here. I do expect some recovery as inflation continues, but today would be a bit of chop going into it. We are expecting the PCE and PMI. I've got to watch employment going forward. And a lot of this, especially the 10-year yield, as well as the relative strength of the dollar, they're gaining strength at the moment. That's putting on pressure. If they begin to ease off, it will give a little more room for the stock market as well. So with this, cryptocurrencies, we've got Bitcoin under the 60,000 level, and that is putting a lot of pressure as basically a resistance. If it can break through that 60,000 and then reset it as a support line, I think Bitcoin could rise very rapidly, but we'll see what happens with this. Got another thing. How do you, instead of this T-bill and chill trade, so to speak, how else can you move outside of what is happening in this environment? Well, we've got Bloomberg is talking about India seeking to renegotiate trade deal with the UAE after a surge in precious metals import from the Middle Eastern nation. So basically, we've got central banks around the world, countries, and a rise in the precious metals. Even though they're down a bit today, the price has gone up quite well. Gold is now one of the best performers for the year. Okay, calendar, let's hit this really quickly, but we are expecting PCE. So now the Fed isn't looking at inflation numbers as much. The reports will matter, but really what they're looking at now is employment and any numbers, reports that have to do with employment. So no surprise, also wanted to bring this up. They reported the US trade deficit in goods widens sharply to the highest level in more than 2 years. Well, that's not a surprise because the GDP right now, what the US is producing, is war weapons and things to go over there. We're not trading. We are importing goods, not manufacturing much more than the weaponry, which is heading for one way. So this trade deficit is also functions also as a slight rebalancing of the currency. So if we are purchasing a lot of goods and they're not purchasing elsewhere, we are giving them US dollars for the goods, taking them in. And this is floating a little bit more liquidity into the system by giving the others the dollars that they need. Internationally, there's shortage of US dollars right now. With this, we've got the trade imbalance was up 6.3%. So this will continue for a while until things change. It's just the direction that it's headed. And as I said, this is a way that's basically creating liquidity through that trade deficit. So with earnings, we've got a couple going on today, as well as prior to market open tomorrow. Nothing majorly moving, couple of indicators, I think mostly for retail. So with this, I'd like to go into basically what's going on in the background. We had this statement come out from DJT Running saying US will be the crypto capital of the planet. We've got both candidates for the United States really trying to support cryptocurrencies now. It is the wave of the future. But the significant thing in my mind is that these say crypto capital, not Bitcoin capital. There's a big difference, first. Second, I think we've already missed this boat. I think UAE has put a lot in place, and as well working with BRICS, China actually has the upper hand. They hold a couple of the larger miners, and they are state-owned. So anyway, we'll see how this goes forward. It could shift. It could shift. If the policies and some other things happen, United States could be much more crypto-friendly than they are for sure. Right now, they are crushed under the regulation, and there are many the exchanges don't want to do business in the United States because of it. So shifting to artificial intelligence, data centers using about 1% of the world's electricity, while crypto miners, which surprisingly they always bring up as energy hogs, is only at 0.4%. Now, they're saying is AI's whopping energy consumption a solvable problem? I think that it is, but the point here is that they don't complain about that. They only complain about cryptocurrency miners. So kind of a double standard there, and a lot more going on as well. So we've got Apple and NVIDIA in talks to invest in OpenAI. Ken, that's Altman's project. We'll watch how that goes, but it should move their stocks. We've got United States airports, and I can tell you this for a fact that it's true, witnessing a boost in new tech. They're talking about biometrics, facial recognition using the basically digital identification. Right now, you can still decline it and go to old-fashioned identification and ask them just to look at you and match you, as opposed to saying that they're taking a camera photo and promising that they're going to delete it later, but letting the camera photo match you up. So it doesn't really match with what's going on, the story, but we know what's going on in the background. This is all a push towards the CBDC. So a couple of other things. We've been talking about real estate in the real economy. Florida's having issues with their coastal condos, not just coastal condos. It's bleeding through, and this is because of the massive fees now with insurance and HOA fees. So their real estate going down, getting very weak. And we've also got severe weather. Also wanted to just bring this up. Is a concern as millions are traveling for this holiday weekend. So just if you plan on traveling, plan extra time because you may get caught up somewhere, particularly if you're flying. So back to real economy, Dollar General warning United States consumers, this is on the lower end. They're running out of money and they're going to have to hold on because there's more money that they want to squeeze out of the middle class. So they're going to continue until they get to where they need to be, until their objective is fulfilled. And that's basically wiping out the middle class. Another story, we've got US Steel, which the ticker is X, rising after Nippon Steel pledging $1.3 billion in plant upgrades. Now, they've still got a deal on the table to purchase them, so we'll watch that today. A couple of other things I wanted to mention. United States stalling on G7's $50 billion loan to Ukraine. They're saying it's a loan, but they have already defaulted, and they're still looking at giving them more money. Again, it's not about the money or the loans. It's about the fact that they can continue to produce weaponry and then sell it at a deficit, get the so-called dollars into circulation and boosting the GDP and the economy. But these numbers are not real, and it's going to come back sooner or later. So we've got the United States to give Zelensky free hand on deep strikes into Russia. Now, this is a serious escalation because basically, as Kim.com is bringing up in here, Pentagon gave Ukraine permission to strike targets on Russian soil. These can only be operated with United States satellite targeting assistance. So with this, Zakharova is the foreign ministry spokeswoman for Russia, and she says that Washington has effectively become a party to the Ukraine conflict. This is as close to a formal declaration of war as you get without it being a formal declaration. But any retaliation, they are holding United States responsible and moving forward with this. So not looking so good. It is a long weekend. I'm bringing this up so that you can be aware. We've got a few warnings on the horizon, and not just to put out fear, but just to make you aware so you can be ready. Be cautious, be prepared, and then live life. Have a wonderful weekend. The other thing I want to say, the Seoul Union burning into the Red Sea. So they talk a lot about climate change, climate control. All of these things are due to the weather. They're concerned about the gasoline in your car. But this tanker spilling because of their war economy, and their other failed policies in getting into this warmongering is much worse for the environment than multiples of driving vehicles on the road. I just want to point out the hypocrisy if it's not so incredibly burning and in your face that you can't see it for yourself. So with this, I'd like to remind you, pay it forward. Super excited. Greg is back. He does have to have another emergency surgery, but we expect to see him later. With this, I appreciate all that everyone has done here. I wish you a wonderful long weekend, and just to stay aware of things. Until I see you again, my friends, stay free.